Today, April 9th, 2025 was the craziest day in the whole stock market. And don't say that lightly. We just saw the biggest, most massive swing from low to high of about 14% in the Nasdaq. Guys, this is not a meme coin. This is not some random crypto. This is not some random penny stock. This is the Nasdaq, and we just saw over $4 trillion added in one single day. In today's video, we're going to be talking about why did this happen just a couple of days ago. This was a bear market. We were down more than 27%, which was more than the drop we had in 2020. Don't worry, the market is crazy, but you got me leading you through these tough times, these crazy times, a lot of volatility, a lot of these opportunities. And I do appreciate you guys watching this video because it does take a lot of time for me to make and a lot of work for my editors to learn about how to edit this crazy market volatility. So all I ask of you is like, subscribe, comment down below, and make sure you watch this whole video because you know I don't want to miss it. You're going to want to know what to do with your money during these markets. First, let's talk about what was going on. Well, we all know by now Trump's favorite word, tariffs. He had tariffed every country in the world. It doesn't matter if you were in Antarctica. Antarctica had tariffs too. The poor penguins couldn't export their food to America to make some money to get some coats for the winter. Well, guess what? Within just 3 to 4 days, he made a whole 180. He decided no more tariffs on anybody except China. He proposed a 90-day pause on his tariffs. But why did he do so? Well, this is what we call the art of the deal. This is what Trump wanted all along. He didn't want the tariffs. He claims that over 135 countries have hit him up and hit up the White House saying they wouldn't work out a deal to bring down the tariffs on both countries back to parity. So this means 0 to 0 on both sides. And of course, this is what Trump wanted. It costs less now if we had 0% tariffs to export products to other countries. What does this mean? This means more money for American-based companies and American economies. Businesses will have more money. Consumers will have more money. Just good things all around. Now, why did he exclude China? Well, China has been going back and forth with the US with tariffs. First, they decided to give some more tariffs to the US since they were raising their tariffs. And then America was like, well, I don't like that you did that. I'm gonna raise it more to 50%. And then China's like, you know what? I don't like that you wanna raise it more. So I'm gonna raise it more too. It was like two little kids going back and forth. So Trump's like, well, you know what? I'm done with all of this. I'm gonna impose 125% tariffs on China and then remove all tariffs on all other countries. This means that the US can be less dependent on China because we can look at other options with other trade partners, which generally would hurt China. Now, a lot of people are very scared about this. Like, do we really want a war with China? But a lot of people don't understand that China has done a lot of things to the US when it comes to tariffs, imports, export, intellectual property. They like to steal, and they haven't really played fairly. So all business owners are actually very happy. You have people like Kevin O'Leary, which are claiming we should be tariffing China 400% to have them finally come to a trading table and agree to the conditions that will be beneficial both to the US and to China. Now, whether you may think it's a good thing or a bad thing, well, the market thinks this is an extremely positive thing. We saw a massive gain, which erased almost 2 weeks worth of downside in the last month. Now, does this mean that we're completely out of the woods? Well, no, we're still technically in a bearish trend, as yes, this could be a massive sign for a reversal. We have to understand how the market works. It's not simply people just buying up shares, but there was a huge amount of puts and short positions into the market. So when we had a big rally, it caused this waterfall effect that all of these people shorting the markets, making a ton of money on puts, have to close their short position. You close a short position by buying the exact asset. You have to buy it back to close a short position, which again caused this waterfall effect, this domino effect, as you will, to push prices even higher. This is what we call a bear market rally. A bear market rally are the most aggressive, fast, and strong rallies that not even during strongest bull markets can be copied because you have all these shorts that have to cover the positions and increases this buying pressure. Now, we're not completely out of the woods. The number one strategy that you should be applying in this case is dollar cost averaging at key levels. I've been praising this $2 cost average for the past 2 to 3 weeks, especially if you follow me on social media. You see me posting on Instagram, TikTok, even tweeting. Over this weekend, last Friday, I tweeted that I was turning bullish. Yes, against all odds, against all the people hating on me, saying, Tonio, all these tariffs, the market is new, how could you be turning bullish? Well, guess what? Whenever do you see blood in the water, this is when you have to be sharp. This is when you start buying. You don't get scared at the bottom after the market sold off 30% and then you get bullish when it goes back up 30%. You want to do the opposite of what the herd, the sheeps are doing out there. And this is how legendary investors like Warren Buffett are able to beat the markets. The emotions of fear, greed is exactly what the market feeds off of and exactly how they're able to steal your money every single year. Could this finally be the pump Trump market that we were all hoping on? Well, I believe so. A rally so strong is almost never faded. Now, again, everything I say, guys, is not going to be financial advice. It's just simply my opinion and what I think. You make your own analysis, make your own research on whatever you think is best. The best things to always do is to have a versatile portfolio, which is covered in all regards, which also includes things like the SPV, SPY, VOO, the QQQ, and all of these ETFs, which long-term over a stretch of 7+ years and never giving you a negative return. Now, we're still at this kind of price, guys. We're still down well over 15% from the all-time highs. So if you do have stocks that you really like, this is still a good time to dollar cost average slowly in. But now, if you don't like these prices, you're like, I want lower, well, it's fine to wait as well. You just have to be okay that potentially you might miss the move. Now, enough of the chatter, and let's jump over to the charts and let's see what they are telling us. Well, obviously, we see this huge Drake-like candle, guys, from the bottom to the high, almost 16%. I'm telling you guys, I'm a nunk. I've been day trading for 11, going on to 12 years pretty soon. And something like this, I've never seen before. But now, if we look, we are still in this strong bearish trend. Now, could this be a green sign that we could reverse? Yes, it can be. But we also have to be smart investors and not just chase because we see a huge candle. One of the first things I like to know is if we take a Fibonacci tool from the top to the bottom, is we're right around or very close to this 0.5 retracement. This means the whole bearish trend, this was the 0.5 retracement, which means half the trend has been erased. Now, me personally, I would expect a potential bearish attack at this area and potentially a pullback. A pullback to around this 18,250 area, and then potentially some more buyers there and start to see if we make higher highs and higher lows to cause this reversal. Now, we also can, right here, we can draw a trend line. So you can see price has been rejecting off of this trend line multiple times. Now, a lot of times trend lines are laughed at. They're like, how can you trade with just a line on your chart? But they're an easy representation for our visual to understand the trend that we're in. As you can see, we hit it here, we hit it here, we hit it here, we hit it here. If we were to break above this and break this downtrend, could really talk about finally a new all-time high and really feel bullish after that. Now, if this rejects, where would be my first levels that I want to buy? Well, of course, if we make to a new low here, 16,428, it would be a really interesting area where I like to buy some stocks. Where some stocks I like to buy, I'm going to name you a bunch and then you're going to have to do your own research. But of course, blue chips such as Apple, Microsoft, Nvidia, AMD, Tesla, Meta, Netflix are never a bad buy. Now, if you want to play more defensive on some stocks that are a lot safer, you can go and look at the route of McDonald's, Coca-Cola, Costco. And of course, you do want to hold some gold and silver in your portfolio. Now, there is some higher risk stocks, which I did by the dip on, which is Coinbase and PLTR. Coinbase, I really do like because I am expecting a really nice bounce on crypto, but that's a conversation for another day. What I'm really going to be paying attention of is going to be the close of this monthly candle. Now, we're still early on, just about midway to about halfway through April, but if we can hold this 2021 previous all-time high and close above it, I do expect us to potentially break a new high. Because this means we are still holding the overall bullish structure of this multi-year from 2009 bullish market. Now remember, price long-term is always bullish. If I zoom this out and I ask you, hey, you want to go back to 2008 and buy some stocks? You would say, hell yes, I'll sell my house and buy some stocks there. But in reality, if you didn't know how price looked past that, you would have been scared to buy. And I've had people DM me and tell me, Antonio, where's the bottom? And I told them I was buying around the $16,500 areas. But even though me telling them that, they still decided not to buy because they were in fear. Guys, as investors, emotions go to the side. You cannot focus on emotions. You have to focus on the charts. And always remember, I can bring you to the river. I can make you drink the water. So if you ever feel fearful, just zoom out, understand the markets long term always goes up. All you gotta do is dollar cost average, especially if you're under the age of 40. This is a golden opportunity. Buy and invest in your long-term portfolio, in your long-term investment. So always, if you find this video helpful, if you do enjoy this type of videos, I really appreciate you leaving a like, commenting down below. And if you do want to learn from me live every single day, maybe check out that top link down there. You might really enjoy it.